in a while. My name is Joachim Jere. This is Clear Trades. I haven't done a video in, I don't know, 2, 3 weeks or something like that because I've been super busy looking at a new approach, and that just takes a lot of time, learning a new approach. So I will be sharing with you some of the insights I have from this approach, what I've done so far. And I will also be looking at some of the trades that I've taken, one that worked out beautifully, one or two, and a couple that didn't work out so nicely. I'll be going over my thoughts, some of the mistakes I made. I'm learning a lot at the moment about trade management for this specific approach, also around psychology. But let me actually share with you my screen first before I go deeper into this. So here's something interesting. You can see, I started out, I lost 40%, and then I made it all back, and that's been steadily declining with somewhat an uptick yesterday as I made a nice win. Here, while I was in 40% drawdown, my psychology was unfazed. I was sleeping just okay. I didn't really have an issue. Why was that? Because I had an approach that I worked out with my mentor, Nick Shawn. You can check him out on YouTube. Really good guy. And so I had a lot of conviction in this approach, and I knew I'm going to make this back. I had tested it on demo extensively, and I was very confident. And this is exactly what happened. I knew I can experience significant drawdown with this approach if I'm risking the amount I was risking, and I've made it all back. Plus extra, like 32%. Which is quite good. And then I realized this approach works best really on higher time frames, meaning on the 4-hour, on the daily is the best. If it sets up in that way, it's an overextension approach, meaning it has moved in one direction quite far, it is quite likely to have a mean reversion. I have shared some of the trades I've taken in previous videos. You can check it out. And the approach is fantastic. I loved it. But because it is on higher time frames, it doesn't show up that frequently. Maybe once a month, maybe twice a month, depending on the month. Maybe longer, you will be without a trade. And some of the trades are not going to work out. They're not going to mean revert in a timely manner. So in order for this to be viable, for me to make a living off of it, which is the whole point of doing this trading, is that I would need to risk 5 to 10K per trade, because you're going to have losses along the way and you're going to have wins along the way, especially because this approach was using a 1-to-1 risk-reward ratio. So that's why I switched, and I started looking, or not switched. I still have this approach, but I'm looking for another approach that I can use supplementary, that I will get feedback much more quicker. I can enter multiple times a week or even once a day or something like that. And I can risk smaller amounts. So I've been looking around and I found Stacy Burke. You can check him out on YouTube. The issue I have with Stacy Burke is that he has zero proof of profitability. Now I'm here. I have a runway. I have a family to feed. I don't have I have some income, but not a proper income to live off it in Switzerland. So there's a good amount at stake for me, and so I don't have that same confidence that I hear. And even though I'm up, I am actually a lot more stressed than I was down here, even though I was in pretty heavy drawdown here. I'm a lot more stressed here now that I'm figuring out this approach, because I'm like, well, what if it doesn't work? What if he isn't profitable and just talking nonsense or whatever? But I do have a certain conviction that he's not just talking nonsense, that he has idea of a good idea and a good approach that I'm learning from. I don't think it's easiest to learn from him. But anyways, I want to share this because that's an interesting thing, how objectively you're in more trouble with 40% drawdown than when you are here, when you are 32% up, at the moment 26% up. I am not in that much, the account's not much in trouble. Yet my psychological response is way worse up here than it was here, simply because of the uncertainty that I'm facing currently with this new approach and wanting to make a living off of that. So how's this week? Well, I'm up 1.31%. I made $80, which could have been a lot more if I hadn't mismanaged some of the things with this new approach. So Stacy Burke has a bunch of setups. Let me get out of the replay mode real quick. He has a various amounts, like I don't know, it's maybe seven setups, maybe something like that. I don't know. I don't know exact numbers for it. So what I have done is I have taken one of those setups. It's called the first red day setup, and I've studied that much more in depth. Now, the first red day setup actually has many variations within it. The variations are are coming even just from market context, right? Are we in a downtrend? Are we in a trading range? Are we in an uptrend? Or have we just broken the uptrend? These are all different scenarios in which you are moving in, and which the first red day may set up differently. Okay. First red day basically means that you have a move up. So let me switch to a different time frame. Just for quick explanation, these lines here are session breaks, meaning this shows when the day ended and started. The red ones are when the week ended and started. So that's that. And then these lines are previous days highs and lows. And then you have one more line here, which is a green line, which is the opening price of that day. And that is relevant for the first red day. So we are in a down market, very clearly. At the moment, you can say on a very large scale we're just in a trading range. That's often the case in the currencies, but in what how I've looked at it, I'm like, okay, we are currently in the downtrend. So we have here multiple days or pretty much a week where we have a double bottom, and then we're moving up 1, 2, 3 pushes up. We have a failure here of closing in breakout. You have a closure below the opening of the day. So this is a first red day. What does that mean? That means there's a signal here. There's a signal to check out the next day and see if it's going to set up. Meaning, is there an opportunity for a continuation down? Remember, on the larger scale, we are in a downtrend. And the way you look for the setup is basically you are marking out the highs and the lows of the swing before. The highs are more relevant for me because they are the entry point. If you were the opposite direction, where you're in an uptrend and you have some days of down where it starts to close above, so that would be a first green day, then I would be more interested in the lows. But for this one, I'm interested in the highs because I want to see in the next day, is it going to move into this and fail and then move down, or up here, move into it and fail? Could also move all the way up here, for example, here. So there's different entry points. So the first red day just means, hey, watch this instrument, especially in the context of we're in a downtrend. We have had uptrend, we have a downtrend here. We have 3 pushes up. Now, what will be even nicer for this, for me to work out, is if basically you have this trend line here and you have a proper break of this trend line with the first red day. That will be even better. We'll see, maybe we'll get a break of that trend line next on Monday, and push up, failure, and then hopefully I can short this thing. So that is one variation of the first red day that I have studied in depth, and I'll probably make some videos around that in the future and be sharing more about the setups because they still need a lot of testing. But before we go further, let me switch real quick my screen, and I'll go with you over some of my trades that I've taken because I've made some stupid mistakes. All right, let me pause this, and then we are going over because it's going to be easier. I thought I'll do it in trading view, and then I thought, yeah, maybe I'll show you the setups that I have that I've taken or not taken, failed, whatever you want to call it. All right, so let me open this. One second, I'll close it. Close it all. I'm going to open it freshly because I have a bunch of things open, and I want to make sure that I actually give you the correct one. All right, correct window. Otherwise, you're not going to see what I'm talking about. So, all right, gallery. Here we go. I'm going to share this. All right, so this is the British pound against the Canadian dollar. This is something where it is, in my opinion, in a downtrend. This is already entry. Let me go back, see if I can find some larger context. I might not have that. No, don't have that. I'll show you on the next time. So this is in the downtrend. We had some movements up. We have first red day. So I'm looking. Here's the line similar to CHF JPY that I've just drawn. We have 3 pushes up into it. 1, 2, 3. This is on the 1 minute chart for entry. So I'm entering here as a thing, as a trade. This is on the 5 minute chart. Me entering here. Yeah. So we have push up. We have the failure here, close to that swing high after its consolidation. So this looks like a reasonable entry for me. And then I get stopped out basically, and I enter again. So as I've entered here, it started moving down. Once it broke below the EMA, I was like, I'm going to move my stop loss to break even. Got stopped at break even. We have a second push up into this line. So I'm re-entering this thing again. And I'm going to get stopped. I'm getting stopped out again. I'm already not in the best psychological place at this time. I should have taken some time to actually move the stop loss, but I moved it too quickly. So I think that was related to my psychology. All right. So here's on the 1 minute chart. I've entered. Oh, this is the third entry actually. Yes. So there's a third entry. You can see now is 1, 2, 3 pushes up into it, and a movement down. I'm entering, but then I'm nervous at this point, so I'm moving my stop loss way too soon. So I'm getting stopped out here. I mean, come on, I should have at least waited for it to break this trend line, move down, and then once it moves below, then move my stop loss. But anyways, I've moved my stop loss again too early. So far, really, I've done 3 trades. And I'm stopped out break even on all 3. Not really a big issue. Haven't lost any money, but psychologically, this has impacted me. And so afterwards, I'm starting to chase the market, right? So I'm entering. I'm like, oh my God, I moved my stop loss too early. So this thing started to move down. So I'm re-entering here. And then I have to close here at a loss, making minus 21 bucks on this thing. And then I have another one where I'm like, okay, so now it's starting to look like it's broken down at 3 pushes. It's not moving. You can see the wicks here. I'm re-entering and I'm closing here, and this thing just starts ranging afterwards. And I've lost 42 bucks, which was totally unnecessary. And the other thing I have to notice, look, the timing. I am trading, or I'm looking for a trade at around 7 a.m. I'm starting to check the time, the trades to 11 a.m. This is the window where I might be able to enter a trade. It doesn't mean I always sit in front of the screen. Like if I'm coming to the screen at 7 a.m., I can see it's down low. I draw my lines. I'm like, I might be interested if it either fails around the opening, this price here, or if it fails up here, I might be able to enter. So I'm not going to be sitting in front of the screen. I might come back later on to check how it's gone. And sometimes I do stick around the screen because I'm like, okay, I think there's a high chance it's gonna move. So I have done. Now I lost my train of thought. So I have entered this thing multiple times, probably a bit too early in some of those instances. But then when I start chasing the moves, they are outside my timing window. It is past 11. This is close to 12. And so is the other one where I've lost money. So if I just walked away, let it be, I wouldn't have lost my 42 bucks. Could have avoided the whole thing. But this is exactly what I'm talking about when I'm saying I'm ironing out some of the issues with my trading approach in terms of management, entering, and all of that, and also the psychological aspect of it. So that was GC. Now I'll show you also CHF JPY. That will be a bit quicker because I only had one trade there that I took. I'll share the screen with you again so you can see exactly what I'm talking about. All right. Okay, so this is CHF-JPY. Now you can see my little annotation here. How fucking dumb are you to trade this long? It is in a downtrend. You warn 3-day shorts is meaningless. So basically what I was like saying, look, this is somewhat of a downtrend. So, or you can look at it as a trading range here. But if I'm looking at this segment here, we had a good uptrend and now it's making lower lows and lower highs. So this looks like it's in a downtrend on this relevant time frame. Now, there were 3-day shorts in the market, basically meaning there's three days where it broke the previous low, but we are in a downtrend, so it is really not that relevant. Plus, the 3-day shorts I've not studied as in depth as the first red day that I've mentioned before. You can see how I have entered here just to give you an idea. You know, we bottomed out here with a channel. I'm looking for a parabolic move up back to here, back to a previous high. That's what I'm thinking. Is the channel is going sideways, especially when you look at this one here. You know, it's starting to go sideways. It looks like it might have an explosive move coming. I'm entering here. I'm not happy with my entry or close to the top of the channel. And when it started to go down, I close minus $10. Again, mismanaged, lost my nerves, not good. You can see it continued up. This would have been easy to manage, like very easy to manage. Once start breaking the trend line up here, I can just move it to break even, walk away. Or even if I see this, how it's moving up here and start to come down, I can just close. So again, an unnecessary loss that I have taken on this trade. This is just, oh yeah, I can show you the 3-day shorts. 1, 2, 3. So you can see previous low is here. We have broken down, closing here. Lower, so that's the first day. Here's the second day closing, and then you have a third day, and then starting to move up. That was the idea, but it was all wrong because of the context, as I have mentioned now. Kind of dumb. All right, so that was that, and then let me do one more for you. This one is a winning trade. I'll just pull it up real quick on my screen and then share it with you. And that was yesterday. Actually the GC trade, I'll do that one real quick here as well. I can just navigate it while we do that. Where are we? Here's your screen. Okay, here we go. So I already shared this with you and how I mismanaged it and messed up, but I just want to show you the context. I'm not going to click away the session breaks. I hate when it's like clutter like this, especially in the higher time frames. Yeah, I can just actually do this. But still, anyways, we'll leave it. So overall, we had this whole break of the channel, like on the higher time frame here, break of the channel is looking like this is in a downtrend. We are somewhere here where we had a week of up, potential double top, first red day. I'll show it to you again, just a bit closer, first red day, because I didn't capture context before. We have a first red day, we have a break of the trend line, and then here I'm looking for the short, which doesn't work out because it just doesn't set up properly. I could have walked away with break even. I would be done for the day, but I've lost money on it, as I've mentioned before. All right, so GJ, I had 2 winning trades. I don't know, was it both GJ? Forgot. Anyways, so this is another one. This is not a first red day. As you can see, I was thinking whether I would consider this first red day. Sometimes, you know, the criteria is usually it needs to close below the line, but sometimes you have behavior of price that mimics somewhat of a first red day where it doesn't fully close below the price. We kind of have this peak formation in here, which I was thinking might be the case here. But anyways, we are in a downtrend overall as with most of the JPY pairs at the moment. We have some moves up. We have 3 days long in the market, 1, 2, and then here you're triggering and you're failing. So we have 2 days long in the market. Here we have one more trying to break high. When I say 3-day longs in the market, basically means that some people and some traders, the thesis is that they trade as soon as it breaks a high. So let's say on any candle, because it's going to be on a daily candle. So let's say here it's breaking above, you're buying. You're breaking above, you're buying, as a breakout trader, basically. That is the thesis. So you have 3 days of breakout triggered in here. And it is non-farm payroll day, so I am expecting for it to have a strong move down. You can see here again 3 push pattern that is very common now in my trades. I really like this 1, 2, 3 head and shoulders. You can say 1, 2, and the head, the shoulder, head, shoulder, failing. And then I'm entering in. Now, I don't have all the entries, but basically after here's where the news came out, and then I start entering, and I start entering heavily into it, but I am sizing small because it's after news event, and we have a wick on the 1 minute chart. You have a wick coming back up. I entered actually here and I closed it because I'm like, I'm not sure this is going to work out. But then I see how it's starting to fail, fails again, because I started to go lower and lower. So I entered about 7 positions, 0.03 lots each, and that netted me about $140, and it was over in pretty much no time. So what I did in terms of trade management, once I've entered, I don't think I've entered much below this one. I did one more somewhere here. I entered. So once it broke once it started breaking this one, this low, I moved everything to break even. I walked away. I might take profit in, and it just played out with zero management, which is the whole idea. So if I take it from where I first was interested in entering and closed and whatever, it took 44 minutes, 45 minutes, basically. So this is the kind of trade that I'm looking for on that with this approach, which worked really nicely. And then again, you have a first red day now where it went up, it failed. I'm looking for a continuation down. I'll be evaluating whether was it better, is GJ better, is HFJPY better. We will see. There was another trade that I've taken. I think it was on GU, if I'm not mistaken, which I also, I mismanaged GU at some point in here. I mismanaged it, but I had a nice trade here. Yeah, this is the one that I have taken. I'm not going to go over the entire context. Yes, I can. I think it will be useful. And then we will wrap up. All right, so again, we are in a downtrend. We have an uptrend, 1, 2, 3, moving up. Then we start to have a first red day here, which is a signal day. Now, you have an inside day in here where it doesn't go higher or lower of the previous high and low. So it's an inside day. And which sometimes happens that it doesn't set up the following day. So sometimes it takes 2 days, sometimes it takes 3 days for it to set up. So just because it was a first red day and then it didn't work doesn't mean that the signal is over. The signal is still there, or can be still there, and you need to be mindful of that. Though I guess you could have there was maybe something in here to short. I'm not sure. Anyways, I didn't take that. What I did take is here, in here. The shorts, because again, beautiful 1, 2, 3 moving down. I had my take profit down here, which was too aggressive. So I unfortunately did not take a full win on this. I was like $160 in profit once that big thing came. Again, in terms of trade management, I entered here somewhere on the 1 minute chart. Once it start breaking down below those lows, I'm at break even. I walk away. I don't even manage to trade anymore. And then it moves down. I check it from time to time from my phone. I have this huge candle here. I'm considering should I exit because my take profit is just a little further. I didn't. I see this nice wick here. I'm like, I think it's going to go lower, but then it's starting to go up. So I close somewhere here in this vicinity, which is unfortunate because it's almost half of the profit of what I could have made. But overall, it was a pretty good trade. The setup was nice. The execution was good. I was able to walk away. And so this gives me an idea of what this approach really is about. In terms of trade management, you want to have as little trade management as possible. If it is not moving, you can close it. Or you can put it break even and walk away. It gives me a good idea about timing cycles in terms of staying within the window. I have a clear idea in terms of how I want to enter. Because one thing that is obviously still something I need to study more is sometimes you have an M structure here. 1, 2, failure moves down. So it could be, and I think I did actually. I entered here and it failed, stopped me out at break even. And then I entered later. So you don't know what's going to be. Is it going to be an M structure and then it's going to fail? Is it going to be a 3 push pattern? Is it going to be head and shoulders like this one? Is it head and shoulders, which all 3 push patterns are? What is it going to be? You don't know. And that is what makes it at the moment for me a little bit more difficult in terms of trade execution. So I am more comfortable. Just because I'm taking a stop out doesn't mean that I have made a mistake or there's anything wrong with what I've done. Entering here is a perfectly reasonable thing to do. You have you have a potential micro-M structure. In this case, it did not. And so I have those setups printed out. So I have setups printed out and I filed them so I can see and I can study them. I can study the 3 push pattern, the head and shoulders. I can study the micro-M structure, and I can study where it just moves up into the area, fails, and then moves down, at least on the higher time frame, maybe 5 minutes, and on the 1 minute, maybe has a little extra pushes around. So I can study them and I can look at them. And there's other ones where basically it just kind of slides off, so it just moves and it just kind of moves down. Let me see if I can paint that real quick. And then we're going to wrap it up because this video is long enough already. So kind of put in somewhere a peak formation. So something like that. Well, this doesn't. Okay, I really suck at this tool. Anyways, you have somewhere a peak formation, and then it moves, and it just kind of slides down. It slides off. Maybe a 3 pushes, kind of going lower, and it slides off. So there's variations and variations in terms of entry criteria. There's variations and variations in terms of the world context, etc. So you can see why this is so time-consuming for me, because I'm trying to study this and learn each one of them and make sense of it, so that when I'm trading, I am clear on what I'm trading. Why am I trading a trade? Why am I moving my stop loss to even, etc. So that is pretty much it for today. Let me know if this was helpful. Let me know if you want to know more about the discoveries I'm making with this approach. I will be calling, or at least sharing, setups that I see for potential trades in my Telegram channel. You can join the Telegram channel there. I'm not doing that at the moment yet, because I'm just really absorbed in learning, and I don't want to share things that may or may not work out and whatever. I mean, that's still going to be the case even when I've studied it, but I will have greater confidence in what I'm sharing, because I do care that I'm not just putting out garbage and garbage ideas. I do want that this channel and myself has integrity with what we're sharing, because it impacts you, it impacts how you might trade as well. And so I want to make sure that what I'm doing actually makes sense and is not just here. So I've produced a video, or I've shared something in the Telegram channel because I should. I have no desire for that. I want to stay with integrity and show you the process that I'm going through myself, and then share once it has reached a certain level of maturity, that I'm more comfortable sharing it with you. And I'll be sharing it in the Telegram channel, and I will be, of course, posting more often again, because my time will be freed up. But there is a lot to do just with that one variation. As you can see, you have one variation of the first red day. Within that one variation, you have on the day itself, you have various variations in terms of how it can set up. Sometimes it fails on that day as well, and there's no setup at all. And recognizing that, knowing when to walk away. And that's just one variation. Now, there are other variations where it's clearly just in the trading range, but you still have first red day, maybe at the top of the trading range. and you can see, okay, that's a good idea for me to study these. And again, then I have to sort through all of that. And then there's the, okay, we have a strong uptrend, it's broken out of the uptrend, it's trying to rebound, and it's failing to push higher. We have a first red day on that one. It's another variation I can do. Then there's the first green day, which is very similar to first red day, and I might skip that. I'm just looking at the 3-day longs, 3-day shorts as a setup, and you're gonna have the same thing again. So each setup that I hear, you know, like first red day or 3-day longs or 3-day shorts, each one of them has lots of different variations and nuances, and there's a lot of work for me to do. So I want to make sure that I have one setup that I have high confidence in, that I can scale in size. Because here's the thing, like I can risk $100. Often these setups, I have a risk to reward ratio of 1 to 5. So if I have a 1 to 5 risk reward ratio, I'm risking $50, I make 250. I risk $100, I make $500 on this setup. So it very quickly becomes quite interesting and quite lucrative, provided I don't lose my shit and take trades I shouldn't be taking. 2, I manage my trades appropriately, meaning that I move my stop loss to break even at an appropriate time, not too quickly, because if I'm moving it too quickly, I might mess up. So at the appropriate time, I move it appropriately. And 3rd, I scale into the trade. So that's something that I'm experimenting with as well. So rather than committing $50 to the stop loss, it's 15 pip stop loss. Pretty tight. So rather than committing $50 right from start, I commit a 3rd, and then I scale into the trade as it's developing at the beginning, quite early on, so that everything is still pretty tight. So rather than moving it when it's just already moving past, so I can move all of the 3 entries in a timely manner to break even, and then walk away from the screen. And that way, if I'm scaling in, it doesn't work out, it pushes against me halfway to stop loss, I can either close the entire position, I can close part of the position, but that way the losses will be very small. And then when it does work out, it will be very profitable, which is the whole idea of this approach. And so it looks very interesting, and I believe that it has a lot of potential, this trading approach. And after I've done all my homework with the first red day and having studied and whatever, I do believe it is legitimate. Stacy Burke does seem to know what he's talking about. It is very unfortunate that he's not sharing exactly how profitable he is, not necessarily in monetary terms, but in terms of, you know, percentage gains and how he's compounded this account, how much stop outs does he really take at break even, because he's like, you know, these kind of setups, they're high probability when you're identifying them, meaning once you have entered and it's moving in your direction, 9 out of 10, they are supposed to work out. Now, what does that mean? Is it going to work out as in 9 out of 10 don't result in a full stop out? Is 9 out of 10 meaning 9 out of 10 go all the way to the profit target? Does 9 out of 10 mean it goes halfway to the profit target, and that's within those 9 out of 10? It is unclear to me, and I would really love if there was a little bit more transparency from his side, but that's just not the case at the moment, and that's fine. You know, it's his life and the way that he teaches, and it's been really valuable so far for me. Once I've taken things to my own hands, start to look at the greater context, and for each setup, I'm looking at the large context, I'm looking at the medium context, I'm looking at the weekly context, I'm looking at the day where the setup is happening, I'm looking at the 5 minute in terms of how it is setting up, I'm looking at the 1 minute so I can get the tightest entry possible for this. But you see that does take time, and I need to print the charts and all of that and study it. So anyways, I'm sharing just a little bit on how I'm approaching it in case you're interested in learning yourself, because it does take a good amount of self-discipline and also kind of self-learning, I guess. You need to know how to approach this whole thing. Anyways, I'm blabbing on. Hit the subscribe button, hit the like button if it's been useful for you. Share it with anyone that you believe it is going to be useful. And I will see you in the next one. All right. Take care.